So hello everyone, today I have Saad Idrees with me. He is the co-founder and CEO of Daftarkhwan, and we are together on a new episode of Startup Stories with UJ. So let's start. So Saad, brief intro.
Yeah, okay, so hi, first off, thank you. So brief intro is actually super brief. Started off in technology as a data scientist, BI analytics. Then started Anniversary, slowly started moving towards entrepreneurship. So moved into consulting first, helping governments use data.
So where did you graduate from?
I graduated from LUMS.
And when?
This was 2011.
2011,
and I
okay.
took a course from you as well.
Okay.
But I was really bad, so I don't blame you.
Maybe I was really bad, so students never bad.
No, quite the contrary. So yeah, 2011, and then went into tech, then started applying tech to help governments improve governance, service delivery, data collection, that whole movement, and that kind of slowly brought me towards entrepreneurship, got me interested, and then we basically spotted this problem where startups were kind of having trouble finding infrastructure, getting started, and we thought, okay, it's not such a big problem, it's a cash flow problem, and we'll just figure it out. And how hard could it be, right? So we were just in it to kind of solve it on the side, and then it just kind of sucked it in.
So when did you started Daftarkhwan?
We started in 2016.
So it's a good, you've spent 5 years in industry understanding what it is before starting it out. So tell us more about your co-founders, founding team. How did you got together, and what was really the kind of flipping point where you really started it?
Yeah, so so we were 4 friends initially. All of us went to LUMS. The current co-founder who works with me, Ahmed, he's really like a complete antithesis of who I am. So he's all about the practicality and the money, and I'm just random kid in the candy shop, kuch ye try karte hain, wo try karte hain type, and he's just kind of keeping me sane.
I like this random kid in the candy shop because I'm like
but then you can also relate, you really need someone who can just kind of you can sound it out, and wo thoda sa aapko rationalize.
You need a sounding board always.
Yeah. But like a lot of other startup stories, we initially we were 4, and then there were 2. And वही है कि
after starting up or just before
starting up, few months in, लेकिन उसमें यही था कि initially you start off, you're very idealistic, you think everything's going to be perfect, and everyone's going to whatever, and you have this perfect imagination of how this is going to go, and that was a pretty tough lesson on how to kind of form these professional relationships, how to think about them, and how to really kind of think about the absolute extreme case, and figure out how will this pan out, and if this happens, don't just kind of ignore the possibility that things will go south, because they do.
So the thing about contracts are that you do them when you're happy, and you need them when you're not.
Yeah.
So
absolutely.
It's very difficult to write contracts at that happy moment. Incorporating everything which can go south, and then thinking about it, people just get angry and offended that why when you're thinking
don't you trust me, why do we need to kind of.
So one great lesson is that you really have to think about the exit maybe at the beginning, because contracts are needed when the things will go south. So help us understand, because it's a startup, so you guys 4 co-founders, I'm sure some part of equity has been divided. So how did you kind of salvage that equity? How did you get back? Was it vested? What happened?
So actually it wasn't. So that was one of the things that we kind of learned very early on as well. So uski wajah se, how we had to kind of obviously go about it. We had 2 choices. One was the ethical route, and one was starting over, right? And it was extremely expensive, but we took the ethical route, and I think it kind of pays off as well in the longer run, because call it karma, or even if you want to rationalize it in different ways, you can just, when you really kind of go through a tough time, as a founder or as co-founders, when you're going through a situation like COVID, for example, really tested out a lot of businesses and people. So that really shows people who you are, and that really kind of shows you who you are as well. It's kind of, I think, part of the process of self-actualization as well. And I think that in turn, can be rationalized as it has a business impact at some point in time as well. So it was a very tough decision at that point because it was very alluring.
Why two co-founders left? They were not aligned with the vision. They were thinking that you guys were going too slow. I mean, what happened?
So I think it was just didn't work out. It was a bit of a
different personalities,
vision alignment thing. It was a bit of a personality thing, and plus they had other priorities going on as well. And initially, everyone thought that this is going to run on the side and it's going to be no big deal. But eventually, when things started to get real, at that point in time, it was.
So you have gone through that pain when a founder or two are really working their ass off, and there are a couple of others who are not that much vested. And you feel the pain that.
And and there's no harm in that.
Yeah, that's okay. It's a choice that one. It's a choice that one has to make. So there's no plus minus. It's a choice that you have to make. But then you have to be honest and upfront with your choices.
Right. So they made a choice and we made a choice.
Right.
We could have made the other choice as well.
Absolutely.
It's okay. Let's keep idling and let's keep doing something else. But they made a different choice. But that isn't fundamentally the problem. The problem is what happens when people make different choices.
Right.
And then how do you handle it in a relationship or in a contract? And that's very expensive. Plus.
So 2016 you started Daftarkhwan.
Yeah.
When did your first site came online?
Yeah, 2016. August 2016 is when we went live. We acquired that place in February of 2016, so it took us a long time to fit out that very small place, obviously being the first one. And we've been looking, I have pictures of site visits from 2014. So really slow burn idea, and then eventually kind of coming to fruition. And then even when we started, so because we were one of the first co-working spaces in Pakistan, and even the startup ecosystem, this very well. It was very kind of lukewarm at the time. The incubators were out, they were functioning, but just kind of churning out startups and interesting, not so interesting. Business plan was there but not there. So slowly and gradually, as the ecosystem was also growing, we were also kind of on that cusp of, is this model even going to get accepted? Culturally, again, it's a very real concern that Pakistan is not a very high trust society. So if co-working, for example, does really well in the Silicon Valley or Austin or wherever, that doesn't necessarily mean it's going to translate into Lahore or Karachi or Islamabad. So that's something that we wanted to kind of try out. And again, it was a very, very expensive experiment as well from a startup point of view, because there was all of this cash outlay. You couldn't make money until you've really decked it out. Yeah, exactly, rented it out.
So how did you raise your first initial funding? I mean, from where did it come from?
So the initial, a lot of it was bootstrapped.
Okay.
And that was why we, kind of were going very organically as well. And it was all very demand oriented as well. So for example, when we set out, initially we acquired 2 floors in this building that we started with, and we just had the money to fit out 1. And we figured it out, and we were let's spend the next 3 months in trying to kind of sell it. And it was completely sold out in about 2 weeks or so. And then we were okay, we need to go and furnish the upper floor as well, figure out some money, and then eventually I think we raised the first round in 2018 early, February or so.
Sure.
And that's about
so
far.
So let's come to this raising thing, but before that, let's talk about the business model. So essentially, the business model is it's a smart business model where instead of renting out an entire floor or building, the basic rental unit is a desk.
Yeah.
And you can also kind of time band that desk to maximize the return on that. So that is understandable.
Yeah.
But taking cue from WeWork, I mean, they kind of popularized that model.
Yeah, absolutely.
There were plug and play and others before that, but WeWork actually popularized that model. But WeWork had its own share of fairly bad press, bad outcome. I mean, so help us understand how you feel. And one of the problems that everybody thought with WeWork was really that they felt that a real estate company is getting evaluated like a SaaS company.
Sure.
Right. So help us understand that what happened to your evaluation, how did all this business model work, what your business model is, and how you get evaluated.
Yeah. So I mean, so as far as the WeWork story is concerned, it's actually quite simple. If you look at it, the product, I mean, obviously, we're biased as well. The product is great, but like most businesses, like the issues really come up when you look under the hood, and when you look at the business model, and when you're looking at how the cash is coming and going, right? So if I'm not wrong about the numbers, at the point where WeWork was valued at about like $47 billion, it also had a leverage of about 40, So it was like very heavily leveraged. They were making all of these like, outlandish claims, lots of loans from banks, and then also like trying to diversify in, like borderline weird kind of territories. And then like a lot of megalomania on the part of the founder, who was then ousted, fired, and then eventually made a billionaire through the IPO as well. But there was actually a lot of that going on, and that had to be rationalized, because fundamentally, exactly like you said, they were trying to value themselves in the whole SaaS hype. Like we have a 20x multiple on our revenue. And it's like, but you're not a SaaS company.
Right.
Regardless of how much you want to say that you have tech companies where tech powered and whatever, but fundamentally you're maybe a hybrid of like real estate and hospitality, and maybe some tech enablement will give you maybe a couple of more multiples on that. But to go all the way to 20 or 22 or 24 or something crazy like that, that was absolutely insane. And the market had to correct itself. It's actually lucky that they didn't go to their IPO, because they would have at that point in time been absolutely massacred. Yeah, because like you can find that one SoftBank or whoever out in the market, and if you find one, that's your value right there, and then the rest of the people can disagree all they like, right? And we're seeing a lot of that happening now as well. Like there's a huge hype cycle. There's nothing, I mean, in a pure capitalistic paradigm, there's nothing wrong with that. Like if someone says your car is worth, I don't know, 100 crores. Yeah, exactly.
It's a Bitcoin.
Exactly.
Yeah.
And it's worth whatever you can sell it for.
Agree to exchange that on that number. That's
absolutely,
okay.
Absolutely. Yeah. But the law of probability, you add enough people and enough like shareholders into the mix, and then that always has to kind of simmer down.
Right.
So fundamentally, like that's what happened over there, and it kind of had to happen, and it was also like a big lesson. And people can take it both ways, because like one lesson is exit at the peak, don't get greedy and don't wait for it to peak more. And the other is like, try not to go against business fundamentals, because if you wait for a long enough period of time, at some point in time, rationality has to prevail, and business fundamentals have to kick in, regardless of what the hype is. On
the bottom line needs to be there.
Absolutely, like cash is king. At the end of the day, the bottom line has to be there. Your business model fundamentally at some point has to stop subsidizing users and has to start.
So are you more in a, so the way I typically categorize businesses, and it is just my categorization, that either businesses are like P&L businesses, cash flow businesses, or they are generally exit businesses, the way I market term them. So what do you feel? I mean, WeWork really portrayed it as more like an exit business eventually, with that kind of multiples. And then there are great P&L businesses, and I think half of the world, the real economies are built on businesses that generate bottom line at the end of the day. So which business are you in?
I think
we're an exit business or
we're squarely a cash flow business.
So you're a cash flow business.
Yeah, and we've been like very focused on that as well. We've been cash flow positive since month 4 of when we started, and that's been.
I mean, on the surface, it looks like it can be a great cash flow business, because you have kind of minify the rental unit, and you can rent them more and more and more. So eventually, you are creating value on top that you can.
Exactly.
So you are fundamentally a cash flow business, positive cash flows at the end.
And like that was also a very conscious decision, because again, at least at that point in time, it was like, the investment landscape wasn't as hot as it was, as it is right now. That was one. And two, like, even when it is, sometimes it's hot and sometimes it's not, right? So like, we really wanted to kind of build a business where if there's an exit, there's an exit. Great, we can talk about it when we get there. But right now, we're fundamentally driven enough. And two, even if there isn't an exit, or even if there isn't like all this hype around this particular sector, the business has to go on.
Sure. So right now, help us further understand. You take someone's property, you build it, and then you further rent it. That's essentially the business, the core of the business model. So you're investing on someone's property, which you will be eventually leaving at some point in time. I'm assuming your contracts are lease contracts. So how it works, I mean, don't you feel that it may or may not be the right business model? I mean, you're driving traffic to one particular place.
Sure.
But you feel that you're building enough brand alongside that if you move somewhere else, or I mean, how it's working out for you?
Yeah, so I mean, bare bones, fundamentally at the business model level, you've hit it on the head. But what we kind of like to think of ourselves and how we kind of approach how we design those spaces, and most importantly, what you experience when you walk into a Daftarkhwan, regardless of where it is and whether we're there or not there, is where we like to kind of look at ourselves as a community company more than a real estate company.
Sure.
Because like you said, like the whole furnishing and like, operationalization of it is like anyone could do it. Anyone with money, anyone with some sense can just kind of come in and like make a swanky office and invite people in and give them a decent enough service, and they could walk out at the end of the day and be like, yeah, that was nice. And there are a bunch of those, and again, there's nothing wrong with that. But fundamentally, what we're trying to do is we kind of try to look at ourselves as we're basically here, and we kind of did a lot of soul searching on this during COVID as well, because the space is all shut down, right?
Yeah.
For about a month or two.
That is my next question, that what happened in COVID?
Yeah, so like, a couple of months, space is completely shut down. And then even after that, people were like, turning out at like 5%, 10%, maybe sometimes even lower in terms of the capacity of the entire space. And that really kind of got us thinking, and as a company, we kind of did a lot of conversation on like, okay, so what are we? Like, is this it? Like, spaces are out, so is there no more Daftarkhwan? But we had a really solid mentor advisor who fortunately really grilled us like sometime around 2019. Okay, like, what are you doing? Like, what are you? Just like a real estate company, or are you just kind of fitting it out? Kya karna hai? What's the purpose? Where are you going? What are you really trying to do? Acha bas, like itna sa, vagera, vagera. So that really kind of got us thinking, and that's basically what we fell back on. Okay, fundamentally, we're here to help founders grow and scale their business.
Right.
ठीक है? Build and then grow, right? So uske liye, when you kind of look at it from that lens, fundamentally, if you look at Daftarkhwan, the Daftarkhwan is this particular co-working aspect is simply one dimension of what we need to do and what we are doing in terms of enabling the startup ecosystem and in terms of enabling founders in growing their business, right? When you look at it, and there's a number of different initiatives that we do as well. We do the VCX, which is this call where we get all of these investors and these really rock star founders together, and they kind of, come in and have this like one-on-one conversation on like, raising capital for their business. That's a major aspect to what they need to do. In COVID, we took all of our, so what we used to do before was we used to have these in-person meet and greets and like fireside chats and all of this, like we've been doing it since 2017. So like, and the idea was getting together and the community getting to know each other and getting to know the speaker as well. We took all of that online because we also saw that founders also need that sense of community now more than ever. They need services, they need to kind of, talk to different people, they need to learn, they need to help their people learn. So we started a new stream of sessions as well called Insights. So when you kind of look at that, that really can't be replicated or can't be replicated so easily. When you have that kind of community situation going on where, interactions are happening and they're curated in a lot of ways, like, the people that are there, that are not there, the people that are invited to different things, the talks that are happening and how we're kind of, engineering those interactions and how we're designing spaces as well, like very much like you have, in a way that, you know, kind of brings people together, even if they don't want to, like even if they have their own areas in their, you know, confidential spaces, but still kind of inviting them in, and, you know, over coffee or over a samosa party or whatever, just kind of getting to know one another, and then serendipity kind of happening. That is something that, you know, a regular
tangential question, in this era of talent poaching, is it working out for the people in your building, or is it working against them?
So actually, no, that's a very interesting question, and that's a very valid concern as well. So it's,
and also the second part to it, that fortunately, unfortunately, we are here, live in Punjab, all kind of Punjabi culture, so we would like party more and work less. So I mean, so I have a few experiences of sending some of my startup teams to incubators, or for that matter, co-working spaces. I have a kind of mixed bag of feeling. So wanted to know more about.
Well, I mean, you know, Punjabis, they like to party, right? So and there's spaces there, you know, there's that market, and there's spaces that kind of cater to that market as well. But fundamentally, you know what, poaching is a real issue, and I think like the more fundamental thing is also like ethics or lack thereof is like a deeper issue as well. But again, like there's two ways of going around it. There's one way that you try to build these silos, in which you kind of force people away from one another and make it harder and harder. And somehow the other, like, you know, it's always porous, you know, like in this digital age, and everyone's on LinkedIn and everyone's talking about everything, and someone's brother and, you know, cousin and whatever kind of work somewhere else. You always have trouble doing that. And like, you know, telcos have had a lot of issues in the last 20 years or so.
Telcos, banks, everyone.
Yeah, absolutely. Data security is, you know, really up in the air. But like we have this theory, we really think that, again, kind of bringing people together also might kind of help. And that's for two reasons.
Clusters definitely help. In terms of knowledge sharing and whatnot.
Absolutely. So knowledge sharing, but also when you have a real relationship with other companies, like on an institutional as well as on a personal level, it's like living in the same street.
Right.
You know, you try not to mess around with the, you know, whatever. So that also somehow or the other, we have this working theory, not, you know, scientifically proven as yet, but I think that's one of the reasons why we haven't had those issues, because we've seen a lot of engagements happening across companies, but they've been happening either on an institutional level or they've been cleared through management.
Okay.
You know?
So Saad, so far you have gone, that's why I guess you are the leading co-working brand over here. How many sites you have right now?
So we're currently operating on 5 sites.
And largely cities?
This is Lahore, Islamabad and Pindi, so primarily Lahore. And we currently have about 1,500 people that are working out of Daftarkhwan and across all of these sites.
Okay.
And, you know, hopefully announcing some more sites pretty soon as well.
Okay. So what's your 2022 target? It's like getting doubled? What? I mean.
No. I mean, inshallah, we'll be looking at doubling in the next quarter or so.
Oh. Nice.
So hopefully, like by the end of the year, we'll be significantly larger.
Very nice.
Yeah.
Very nice. And are you, since you are cash flow positive already, so are you raising more money or not? Or I mean, how the business looks like?
Yeah, so we're actually thinking about it. Again, like one thing that we did in 2019 was we again really dug deep into the business model. And again, like, you know, for anyone who asks, I really kind of invite them to do that, because the standard business model, how it's operating in North America and Europe is great, but there's a lot of nuances to the local market, and there's a lot of, especially when you look at property, because everyone in Pakistan and their grandmother, they want to invest in property. You know, so there's a lot of like very interesting ways that you can kind of, you know, dabble with that problem. It's simply a matter of like finding the right kind of fit for how you're speaking to an investor or to a landlord or to, you know, your supply chain, and how do you kind of unlock value for them in a way that that would kind of work, and that would kind of bridge that gap between, you know, you not having a lot of money.
Building more larger spaces or more smaller distributed spaces?
Yeah, so larger spaces as well, but also so distribution is important because of the demand side.
Right.
So the users want it to be distributed. If you're living in Model Town, you probably want it to be here. If someone's living in Kent, they probably want it to be on J Road and so on. But when you go to the supply side, they're looking at, okay, how much do you want? You know, so you also need to kind of find that right balance, and that's what we're kind of exploring at the moment, because we've had the very fortunate problem of never having enough supply, and now we're kind of really amping that up. So we're going to 2x, 3x, 5x of what we were previously acquiring, and this makes it really
so somebody wants to work with you, invest with you, what are their options? As an investor, or there are other business models that you also offer to potential investors?
So fundamentally as an investor, because like a lot of synergy, what we've been doing recently, and that has really kind of worked for us, is kind of working with the landlord more closely.
Okay.
And as the brand has grown, and as the community has grown, and as the reputation has grown, thankfully that is also something that really kind of compounds that interest, because now we can go to a landlord, and in a lot of cases, like, we don't even have to go anymore. Especially in Lahore, and now increasingly in Islamabad and Pindi as well, we're getting a lot of inbound interest. So when you start getting that is when you can really kind of sit down and ask the landlord to be a little flexible in terms of how to go about things, because once they start valuing again like the intangible aspect of what you're trying to do, then you can really kind of come in as a collaborator and as a partner rather than simply as someone who's buying something.
Sure, great. Any other thoughts that you want to share? I missed out my questions, anything, because I think it was a great discussion.
Yeah.
And we can close that out, but if you want to share something else, happy to hear that.
No, I mean, again, like, thank you so much. I'm really honored. I don't know if this was interesting or useful, but I hope it was. But I think, like, generally, again, because we're operating in an area which is very glaringly obviously has to be all about the business fundamentals, but I really kind of see this in a lot of companies and a lot of startups every day, that you have to kind of figure out what makes your business model tick.
Right.
And I really feel like there's a lot of hype driven activity that's going on as well, as far as the ecosystem is concerned, and that's fantastic, and that's all cycles of the market as well. But I think I just ask people to think more about like what they're really passionate about doing, because even if it's not in today, it's going to be in 6 months down, or 12 months down, and even if it's not, like, fundamentally, if you like what you're doing, and if you figured out the foundations of it, you can always, brick by brick, kind of really build something amazing like you have here, and that's the way to go.
So great talking to you, and it was story of Daftarkhwan by Saad, the founder and CEO. I hope it was useful for everyone, and thank you, Saad, for being here with us.
Thank you so much.